This program is brought to you by realestate.com.au. With more homes for sale than anywhere else, realestate.com.au is Australia's #1 address in property.
Welcome back. There are 2,585 homes scheduled to be auctioned this week. That's up 26% on the same week last year. New South Wales will hold 893 auctions, with about 750 in Sydney. Victoria will hold about 1,200 auctions, with most of them in Melbourne. Queensland will hold about 250 auctions, with about half of them in Brisbane. South Australia will hold 175 auctions, with virtually all of them in Adelaide. Western Australia, Tasmania and the Northern Territory will hold 9 auctions between them. And the ACT will hold 94 auctions. Taking a look at the most viewed properties going to auction this weekend, and in New South Wales, the top property is 62 Wiregrass Avenue, Denham Court. This 5-bedder has 3 bathrooms, 3 parking spaces and a pool. The property is newly built and sits on about 640 square metres. Top property in Victoria is 361 Coventry Street, South Melbourne. This 5-bedroom residence was built in 1889 and has been extensively renovated. Asking price is about $2.9 million. The top property in Queensland is 49 McDonald Street, Lota. This home has been unfinished by the builder and is being sold as is. Top property in South Australia is 16 James Street, Thebarton. This charming 4-bedroom cottage is close to the Adelaide CBD, has 2 bathrooms, backyard and parking. Asking price $895,000. Top property in Tasmania is 77 Main Road, Perth, which is a small town just south of Launceston. This large 4-bedder was built in the 1930s. It's been painted and renovated and has a big backyard. And the most viewed property on the REA Group website this week is the mansion in Victoria that we showed you last week. So instead, we're showing you the second most viewed property. The address is 80 Dinwoody Avenue, Clarence Gardens. This 1920s bungalow is located a few kilometres south of the Adelaide CBD. The home has 4 bedrooms, 2 bathrooms and space to park 3 cars. The large open plan living area at the back of the home was only built last year. Backyard was redeveloped at the same time. There's a deck with a built-in barbecue, large lawn, shed and fire pit. There are cafes nearby and a supermarket. Asking price for this one's about $1.7 million. The auction is on the 1st of June. And for more on property, I caught up with Paul Ryan from REA Group a little earlier.
It's been unseasonably strong for the last couple of months now. 2,500 auctions this weekend, another 3,000 scheduled this weekend. We normally see June, July as kind of the slowest months for auction numbers, and it slows down a bit in May, but we haven't seen that. So it's looking like really, I think it's seller confidence, it's stability in interest rates, it's continued increases in home prices. The market is just in a really stable position for buyers and sellers at the moment.
So there's still a lot of stock out there.
Yeah, we've seen stock on the market has been nabbed up pretty quickly still. Although we've seen the number of listings increase, the amount of stock on the market hasn't increased as much. We've seen auction clearance rates hang around 60%, which is very solid for the number of auctions we've been having. Really, prices keep rising. Demand is still really robust, absorbing all of this extra supply.
And how much traffic are you seeing on the REA Group website?
We've seen continued high rates of traffic. Still lots of property seekers out there, particularly overseas. We've seen one of the biggest years for overseas demand for our website in several years now.
Wow. Yeah, you mentioned overseas. Let's just quickly talk migration, because the federal budget has net overseas migration of about 395,000 people this year before falling to 260,000 next year and 255,000 the year after that. That interest from overseas, is that who it's coming from? A lot of migrants that are probably going to be moving to Australia over the next year or two, checking out what stock is available.
Yeah, that's what we're seeing. We traditionally see new migrants coming to Australia and renting initially. So a lot of rental demand over the past year or so has been from these high rates of migration. But we are expecting migration to get back to kind of pre-pandemic levels. And really, population as a whole, the budget's forecast was that really we're going to get back to the pre-pandemic trend of population. Obviously, we had population or net overseas migration falling throughout the pandemic. So it's a very big bounce back, but that bounce has a really big impact on the rental market in the short term. But it seems to be working its way out. We've seen rental vacancy rates start to increase. The balance between supply and demand is starting to normalise across the housing market particularly in the rental market.
Now, we just had a chart up on the screen from one of REA's recent reports, basically showing overseas searches for properties from foreigners looking to either buy or to rent. And it looked like the buy numbers were a lot higher than the rental numbers. Is there any sort of reasoning?
I think we used to have the Neighbours boost whenever that would show in the UK. We'd see a big boost on our site. I think that's always the case. There's a lot more speculative kind of views on the buy side and perhaps a lot more serious views on the rent side. But we have seen buys up at the highest level we've ever seen. Rent is a little below last year, which gives you a bit of an idea of the balance in demand kind of shifting towards the purchase market. And that's supporting prices at the margin. It wouldn't be the main reason prices are rising, but it's definitely showing that demand's really robust across the country.
And obviously, a lot of additional migrants coming to Australia. What's the biggest way to fix the problem with undersupply of housing? It's simply just to build more.
That is the unfortunate simple trick, building more homes. But I think there's lots of policies that we can target. So migration, one of the things in the budget was fast-tracking skilled construction migrants. I think that will help at the margin. I mean, there are a lot of supply constraints in building new homes. Anything we can do to alleviate those, in particular, if we can use our migration policies to solve some of the housing policies, that means that we don't have as many downsides from a rapid rate of kind of this catch-up migration.
Because obviously migrants, they clearly need a place to live, but they also bring so much economic value to Australia as well. They're paying taxes here, they're going on holidays here. The net benefit is a really good thing for our economy.
Yeah, all of the studies show that. All of the studies show that particularly the skilled migration that we have. Australia attracts very high skill migration, and that is a big net benefit for the country, for productivity, for the tax take, for the general dynamism of the economy. And that's one of the reasons why Australia is the lucky country and has performed so well economically over the past 30-odd years.
And one of the reasons for that performance has been the really strong housing market. Just quickly, we don't have much time left, but just give us a sense of where prices will be going for the rest of this year.
We're expecting continued price growth, but at a slower rate. Expectations for interest rate cuts have been pushed out. I think that'll slow the market a little bit, but really that weight of demand is likely to keep pushing prices up across most markets for the rest of the year.
Because we've seen some double-digit growth in some parts of the country. We're looking at more single digits this year?
I think so. We're really seeing, we're starting to talk about this 3-speed property market. Brisbane, Perth, Adelaide, still going at a rapid pace. We've got Melbourne, Hobart, ACT, pretty flat, really. And then Sydney in the middle, up just 7% over the past year, although 7% is pretty strong. And they're all being impacted by different factors. But in the middle there, slower growth. We're expecting all of those markets to slow down a little bit, but still positive growth across almost all the markets.
Paul Ryan, thanks for your time.
Thank you very much.